Hi there, good afternoon. This is Your Stocks. I'm Mangla Malu. With me is Sumaira Abdi. This is a show where we answer all the stock queries that all our viewers post to us, and this is a Friday, so it's a ladies special. But first up, a look at the markets. The frontline indices, they are meandering in today's trading session within the range of yesterday's high as well as yesterday's low. Sumaira, if you take a look at yesterday's high on the Nifty was 11,078. Today's high is 11,071. Yesterday's low was just about that 11,000 mark, and today's low is exactly just that 11,000 mark. So that is something we'll have to watch out for. Perhaps yesterday we had the leadership coming in from Reliance. Day before yesterday we had TCS. The markets are waiting for a new leader.
That's true, actually. So let's see who rises to fill that spot. First up, our top stories. Sensex Nifty flat, lose the early gains. Select banking stocks and ITC exert pressure. Reliance, Infosys, HDFC Bank fight for the bulls. Significant underperformance for the second day by the mid-cap index.
IHH wins the race for Fortis Healthcare, will invest 4,000 crores via preferential shares to be followed by an open offer for shareholders.
Infosys leads the IT pack higher ahead of its Q1 earnings this evening. The street watches for any revision in their margin guidance due to rupee depreciation. The HCL Tech stock drags post the buyback announcement.
Karnataka Bank takes it on the chin on the worries of a weak profit and loss growth despite strong balance sheet. IDBI Bank too under pressure on the news of officers' strike. LIC likely to take a final call on stake buy on Monday.
All right, let's get started then with your stocks. We have Mayuresh Joshi and Rajat Bose who join in to answer all the stock queries that are coming in. So, gentlemen, good afternoon to both of you. Our first query comes in from Bimal Magu, who writes to us from New Delhi. She holds 300 shares of Orchid Pharma at 51. She's been holding on for 9 years. Clearly, she's a long-term investor, so wants to know what she should do. Well, she's been losing money and how. Mayuresh, let me come to you first on this. We haven't spoken for a bit. So first up, let's talk about Orchid Pharma. What's your take?
Afternoon, Sumaira. I think after a long time, yes, and it's a pleasure speaking to you. So large element in terms of what has probably happened with the stock and the consequent correction that you've probably seen. My own sense is that even if she's making losses, I think it's better off looking at alternate stocks. So with that viewpoint, my own sense is that with the bottom-up approach, music broadcast is something that I will like on declines in a staggered way. What the stock has probably done in comparison to ENIL in terms of financial performance, the top line has grown at 18.5%. The margins have been far better at 33.5%. And this subsequent reflection has been seen very clearly on the bottom line, which has grown at 32.5%. Now, if you look at their balance sheet, the balance sheet is absolutely cash rich. You're probably talking about the capex for 39 licenses out of its way. The advertising volume growth has been substantial compared to industry. So with a lot of political elections expected to come around over the next few months, a consequent shift in terms of ad revenues going up and ad volumes going up augurs well for a company like Music Broadcast, which already has a market leadership position in Mumbai, Bangalore and Delhi. So to that bit, again, I think the earnings trajectory should be very, very strong. And even if I assume an EPS of 16 odd rupees, there seems to be potential upside onto the stock over the next 1 year. So I think Music Broadcast is an alternate that the investor can probably look at.
All right, look at Music Broadcast. In fact, today this company announced its decision to perhaps mull over a buyback as well. So that is something we will watch out for. But let's move on to the next one. Maya Patel calls us from Andhra Pradesh with a query. Maya, go ahead.
Yes, this is Maya Patel.
Hi, Maya. Tell us.
Hi. See, I had taken the RCOM share.
Right.
No, so actually now I had taken by like 20 rupees 50 paise, the share. And now it is 30 rupees something change.
Did you buy it for a specific goal, Maya? Any reason why you bought Reliance Communications? Because, the stock fell all the way from 400 rupees down to 20 rupees and you thought maybe it's a good bet at these levels. What was the reason, your rationale behind purchase?
See, I am a big fan of Reliance company. I am a Guju. So I totally reliable like to Ambani.
All right.
Dhirubhai Ambani. So actually we are taken and I thought it will be raising, but it has been come down. So please you can suggest me what I should do actually.
All right. Well.
Because I have 33,000 shares like.
Yeah, we do understand that. Mayuresh, what would you say to a person who bought it for the reason that she just mentioned and she's losing some money?
So afternoon, Mangalam. I think it's a very difficult call to take, but a large element in terms of how the stock has probably performed in terms of its own financial and operating performance. I think the stock price itself is reflective of what has probably transpired. But again, I think, an alternative is something that I can suggest to the investor with a long-term perspective, because our entire premise of probably staying with good qualitative large and mid-cap stocks will probably derive the strong earnings momentum and subsequent ROIs. So alternate investment probably that I'm looking at that the investor can probably do is Bata India. Now what the stock has done in terms of store expansions, expected to open 500 odd stores over the next 4 to 5 years. Ladies footwear is around 30% of its overall product pie. That is expected to grow very, very strongly over the next 2 to 3 years. A lot of more products getting introduced into this sub-segment. And again, the expectations are having a very strong earnings momentum. So our own sense is 17-18% top line growth. We're probably looking at 22-23% bottom line growth. Margins expected to sustain around that 14-14.5% mark. The cash on books at 588 crores as of March end is very, very supportive in terms of what can actually come through in terms of yields as well. And a large element in terms of their product mix along with SSG growth of their existing stores should propel earnings growth. So the alternative that the investor can look at is probably Bata India. Yes, I think there are some investments that are done, but unfortunately I think you should get over it and look at stocks that can probably deliver better returns over the next 12 to 18 months.
Right, Maya, the advice for you is simple. Take the emotion out of investing and you'll do much better. There's important news flashing at the bottom of your screen. A Maharashtra minister was speaking in the State Legislative Council has said that effective the 1st of August, people will be allowed to carry their own food items into multiplexes, and should this not be allowed, strict action would be taken against those multiplexes. Mangalam, this is a space that you track carefully. What does F&B actually contribute to a company like this?
Well, for all the multiplexes, Maharashtra is a very important market, and F&B itself, food and beverage, is important. So as per the latest results that PVR had reported, so 2018, close to around 27% of the revenue comes from food and beverage, and 25% of PVR's total screens are in Maharashtra itself. So now there are two big fears. The first one is that while just 27% of the revenue comes from F&B, it's a higher margin business. So it's not just the revenue we have to look at the operational performance as well. F&B contributes to high margin. So if that is disallowed, that will impact the company's margins. Secondly, Maharashtra, while it contributes 25% to the screen share of the multiplexes, value in terms of value share, it will be much higher because the ticket prices are higher in Maharashtra. The market is much bigger in Maharashtra, and these companies' revenue share from Maharashtra is not comparable with the screen share because the revenue share will be much higher in their overall pie. The third fear is that if this has happened in Maharashtra, is there a risk of it happening everywhere else? So those are the three things that we'll have to watch out for. Most importantly, the fact that this is a high margin business for companies. I mean, you and I go to restaurants, we know the kind of money that they charge for popcorn as well as the food items that they do give out there. We also need to know that just by allowing this, how many people are actually going to carry. So that is something that we'll have to watch out for and hear from the companies themselves the kind of revenue share that Maharashtra gives as against the screen share that it has. The second thing is the kind of gross margins and the EBITDA margins that food and beverage gives to these companies. It counts for about a third of their revenues. And thirdly, if at all this provision is given, will people really carry their food or not? So these are the three things that we'll have to watch out for.
Mangalam, there was an IDFC note earlier which said that this was actually a PIL in the Bombay High Court, which had to do with allowing outside food into multiplex premises. So it was not, the PIL was not against any of the multiplexes, but against the Maharashtra government itself. The Multiplex Association had filed an intervention which made them a party to the case, and they had given their own opinion and suggestions on how to resolve this. But of course, what has come through from the Bombay High Court, I think I'm at a loss to know what the High Court had observed. But the Maharashtra minister now saying that this is something that, the government has come forward and actually taken this action.
Absolutely. So I think we should get the companies to react on this more than anything else, because as of now the numbers that we have are that F&B is
the courts had asked for a response from the Maharashtra government. So I wonder if this is just a response from the government, or it's actually going to come into effect? I mean, the line actually looks pretty clear that it will be effective first August.
Exactly. So that is something that we will definitely watch out for. I mean, it looks pretty clear because there is no reason in terms of law as well for someone to not allow food inside a particular premises. So that is something we'll have to watch out for. The consumer aspect, definitely the Maharashtra minister as well as the court can talk about. But as of now, the street does not like this bit. Inox Leisure down about 10%. PVR also a similar fate there. Mukta Arts has a fair amount of screens in Mumbai itself. They have more single screens than Multiplex itself. That one too losing about 5% as we speak. The sum and substance, close to around a third of the Multiplex's revenues come from food and beverage, but the contribution to the operational performance is much more because food and beverage is a high margin business for multiplexes. And while Maharashtra contributes to about 25-27% of the total screen share, the revenue share from Maharashtra is much larger. In fact, we have Mayuresh with us. We'll get in his quick comment on this as well. Mayuresh, these stocks are down anywhere between 11 to 12% as we speak. What do you think the impact of this ruling be in terms of their earnings? Any numbers off your hand?
No, so Mangalam, I think two aspects to look out for. The average ticket prices, obviously, for movie exhibitors like PVR on the higher side, expected to be in the 205-210 rupee range. F&B, as you rightly pointed out, I think, though the contribution to top line might be around 26-27 odd percent, the operating contribution is significantly higher because it's a high margin business. The third element in terms of whether this thing is actually applicable from a certain date of point, I think that needs to be found out in greater detail. And if this is actually allowed, I think, you rightly pointed out, I think, what is the kind of impact that it actually has in terms of the outlet sales specifically at movie screens in Maharashtra, and the outside risks, whether other states will probably replicate this entire scenario through their own legislative mechanisms. So large element is going to be the overhang that can probably come through in terms of the hit that they can take probably in terms of their F&B revenues. The ad revenues are quite fine. They're holding up. The ATPs might hold up. But this hit can probably have, if it is implemented, and if this is a circular that has come out from 1st August or whatever the date is, I think the earnings hit can be quite substantial. But I think we need to wait and watch for the fine print.